Monday, February 15th, 2021, Monaco 64, home of alternative economics and contrarian views. Before I start today, I'd like to make an announcement about gold investments. I have a promo code with gold investments, Monaco 64. They're arguably one of the oldest family-run bullion dealers in the UK, I would say, not only in the city of London. Their website was hacked last week by a DDoS attack. And I think I was told by Oliver that some of the other bullion dealers' websites were attacked. They're using now Cloudflare to protect their website. There might still be problems there, but Oliver also said that none of the customers' data or information were affected. That's outside the system, the website. And the other thing he said is he's getting silver this week, a lot of Britannias. I'm not sure if it's arrived yet. And if you are looking for silver Britannias, he will have it. It will take probably a week to get to you. It's going to take a little longer, and he's going to have a reduced price as well for the Britannias. So yeah, look at the screen here as well. If you have trouble getting onto his website, give him a call. Use the number on the screen here, the phone number, or send him an email. I'll put the emails here as well for them. I wanted to talk about today because there's been a lot of talk about the silver squeeze, the shortage of physical silver in the retail market, and also now the growing shortage of 1,000-ounce bars or LBMA bars in the silver market, wholesale market. But I want to look into gold because the price of gold is not doing much right now. It's being suppressed by the bullion banks. But I watched on Friday this expert panel, Silver Squeeze expert panel. Chris Marcus was on this panel from Arcadia Economics. I think this panel was run by someone else. I forgot. I think the guy's name is Elijah Johnson. I've heard of him before. I forgot his website. But it was a really good panel. Yes, they went over a lot of what's going on in silver, and that's interesting too. But even more interesting was what Andy Scheckman of Miles Franklin was saying about gold, how it's really hard to access gold as well. So I think it's not just silver, but gold, physical gold as well. We're having a tough time access. I've been looking here at another bullion dealer in the UK, Atkinson's, who are quite big. And if you look at the gold coins they have, out of stock for Britannias, out of stock for half-ounce Britannias, out of stock for quarter-ounce Britannias. They're out of stock for bundles. They do have 2021 sovereigns, but the premium is around 6%, which is quite steep. They usually have 1 to 2% premium, Atkinson's. And then you go down the website, and for other gold coins like Kangaroo, they're out of stock. Philharmonics, 1 ounce, out of stock. Gold Eagles, out of stock. Krugerrands, out of stock. So is it just silver? I don't think so. It's the whole precious metals sector, gold and silver specifically, where we're seeing a lot of shortage and tightness. And the other thing I would say, looking back from my experience following precious metals and having gold and silver, is that the last time I saw these kinds of premium were back, let's say the first time was in '08 when we had the Lehman collapse and gold and silver were smashed down. Gold from like 1,000 to below 700. No one could understand why people would want to sell gold when the whole system is imploding. Well, now we know why, because they try to keep people out of gold, so they manipulate the paper price. And back then, the premiums were around here for gold, and sometimes even more, like 10%. You couldn't get gold or silver if you wanted to, if you're trying to, nothing physical. So what I'm trying to say, these paper prices are getting more and more irrelevant. And the interesting thing right now is that we haven't really had a crash in the price of gold and silver. Yes, we're way below the highs from last year in gold, but it's been like that for months. It's just consolidating. So it's very strange that we're seeing a shortage when the prices are actually relatively stable, I would say. And the same thing the same thing happened, sorry, back in March last year when we saw silver get down to like below $12, when gold went below 1,500. It was very hard to get the physical things, but that was after we had seen not only the stock market crash, but also gold and silver and all commodities. And right now we're not seeing that. We've seen that the CRB is continuing to motor ahead really well. We're seeing the gold silver ratio continue to drop. That's another indicator that this is different. Well, back in March last year, that was when the gold silver ratio went above 100, almost to 130. And right now we have the opposite. So this is why I think we need to be patient and try to not be rattled by the paper price, the bankster price, and try to accumulate silver and gold if you can find it. Yes, the premiums will be high, but you need to shop around and try to get the best premium. I think this thing is going to sort out, not in lower premiums and the prices coming down for physical. I think the paper price is going to have to follow. I think the bullion banks have big trouble on their hands. Watch my live stream from last night. Chris Marcus was nice enough to come as a guest. We spoke about Jeff Curry from Goldman Sachs, how he actually said that when the bullion banks that run SLV buy the silver for the people who buy the SLV, they actually go and then short the futures on COMEX, which makes no sense whatsoever. He kind of let the cat out of the bag, or maybe there is a problem there and he's throwing maybe JP Morgan under the bus, who knows. But yeah, look at this here. This is the gold silver ratio. As you can see here, back in March last year when the premiums were skyrocketing and you couldn't get silver or gold, look at what that ratio did. But now it's going the other way. So there is something there that is unusual. Yes, you need to hold on or try to acquire more gold and silver, and a dropping ratio, a falling ratio is a sign of a bull market in precious metals generally. And I'll show you a longer term chart here. If you go back 2002 to 2008, you see that the ratio topped around 80 back in 2003. And then it dropped all the way to around 48 back in March of 2008. That's when gold topped at 1,000. And then it dropped again during the Lehman crisis below 1,000. That ratio went back above 80 again. And then it dropped to like almost 30 when gold and silver topped at 1,950 respectively. And now we've had the same thing. We had that big drop last year in March. Gold silver ratio went up, and now we're starting to drop again. So I recommend you watch this silver squeeze panel. It's not just about silver. They talk about gold. And I'm going to put a link to this video below in the description and up in the cards so you can watch that. It's about an hour, but it's really good. They have some really clever guys. They've got about, I think 9 people in the panel. So let's see where the markets are this morning. It's 8:20 a.m. London time. Don't worry, Billy is okay. I just left him upstairs today. He was fast asleep. Didn't want to bother him. He was up. Well, he was on the sofa last night for the whole of the live stream. He was really good. Some people say, well, Billy doesn't move. Well, yeah, he doesn't, but if he moved, he wouldn't be there and you couldn't watch him. So we did a long live stream, an hour and 30 minutes. If you haven't watched it, yeah, maybe if you have some time later on this week, you could watch it. Right now we got spot gold 18.19.25. So yeah, Andy Schectman was saying that premium was at least $100 or 10% for gold eagles. He couldn't get any of the other foreign coins. He said it probably would be even harder if someone came to exchange $10 million for gold, because someone asked the same thing. How long would it take to get $10 million worth of 1,000-ounce bars? And apparently Andy Schectman said it's going to take until the middle of March. But he was even more concerned about gold. So overnight, the high's been 18.27, the low 18.16 for gold. Silver is up 17 cents. So silver is outperforming here. As I said, the gold-silver ratio is moving the right way. We're at 27.51. High's been 27.66. The low 27.29. To the stock market now, Dow futures up 133. NASDAQ up 31. S&P up 13. The currencies are strong here, which is kind of annoying, for people who hold gold in other currencies other than the dollar. But I think you shouldn't be concerned, because as you saw, the premiums here in the UK are really high. And I don't think it's going to last that much longer either. So the pound is up at 139. I really think this is not showing strength in the pound, is more weakness of the dollar, if anything. So it's up 1/3%. The euro is up 0.2% at 121.40. The dollar is up slightly versus the yen, 0.2%. So yeah, the dollar's kind of holding on versus the yen. Dollar is down almost 1/3% versus the yuan. It's testing the 640 level. It's been below 640 here. So the dollars continue to flounder versus the major currencies here, with the exception of the yen. We're seeing high-grade copper continue to motor ahead. 382 high-grade copper up almost 1%. We're seeing WTI crude above 60. It's at 60.50, up 2%. I mean, it's crazy how the commodities are continue to rise, and they're keeping gold, the spot or paper price suppressed. That's why the premiums are high. Well, for the bond markets today, treasuries are not being traded today because it's President's Day, so nothing to report there. Treasury market closed. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.